Okay, so let's have a look at working 5, which says patents are to be written off over a 5-year period commencing 2018. So just going to have a look at our patents and see if they've incorporated any investment income. So our patents are here, so they've incorporated 5 months investment income. So the first thing we need to do is find out how much that investment income is. So how much of the investment income have they put into your patents? So our investments are 3%, 360,000, but we started this in the 4th month. 4th, 5th, 6th, 7th, 8th, 9th, 10th, 11, 12. So it's 9, 12. So 360,000. We're going to multiply that by 3%, but we only have it for 9 12ths. And that's going to give us our yearly investment income. So 8,100, that'll go into add to your operating income, because that's the total investment income that we have for the year. Now, of that 8,100, 5 months of that has been put into your investment, has been put into patents. So how much of that 8,100? So you're going to take the 8,100 and you're going to multiply that by 5 and you're going to divide it by 9 because we only have it for 9 months. So 8,100 multiplied by 5 divided by 9. So 4,500 is the investment income that's been put into our patents. So we have been paid that 4,500. When we got that 4,500, somebody put into our patents. So we need to find out the investment income due. So the amount for the yearly amount that we receive. So the yearly amount is 8,100. That's this figure here. We have been paid 4,500, but someone put it into our patents. So what's left to be received from our investment income is this 3,600. And that's going to go into your balance sheet as a current asset because we've to receive it. Now what we need to do now is we need to take this 4,500 out of our patents. So someone's put into our patents, and remember, investment income goes on the credit side because it's income. Patents is an asset, so it goes on the debit side. So if we want to take it out of our investment income, so if we draw up a T account here, so if I quickly draw up a T account, okay, and let's call this one here our patents. I will put our income underneath it. So patents is an asset, so you want to increase an asset, it goes on the debit side, and our income is a credit, so you want to increase an income, it goes on the credit side. So we know that our income for the year is 8,100, so that goes on the credit side. Now we have received 4,500 already. Okay, so our patents in the question. So our patents, if we have a look at patents, is 43,500. So 43,500, that's our patents figure. Okay, so that's the balance that we have on it. Now, we need to take out the 4,500 and put it into our income. So we're going to credit our income account 4,500. We're going to debit our patents 4,500. Okay, so that's why we add our patents on. Okay, because income is on the credit side. So it is 4,500, should be on the credit side. So to take it out with patents, the double entry is credit your income, debit your patents. So our patents are 4,500. That's going to come from our patents. And then our balance then is this 3,600 that we put into our current balance sheet as a current asset. So your patents, the amount, it's going to be 43,500. Your income, so we incorporate an income is going to be 4,500. So you're going to add those two together. So that's going to give us 48,000. So our patents is 48,000. So what we need to do with that then is that it tells in the question that is written off for how many years? over 5 years. So it's going to be 48,000 divided by 5. So 48 divided by 5, 9,600. So 9,600 is how much is going to go into your profit and loss in your admin. And what's left then is the difference between the 48,000 and the 9,600. And that's going to go into your balance sheet as an intangible asset. Okay, so just recapping that one then. So it told us in the question that your patents have got 9% investment income incorporated. So we need to find out how much that investment income was. So we found out the yearly investment income by taking the figure in the question, which is 360,000. We multiplied that by 3%, but we only had it for 9 months. So it was 9/12. So the yearly amount of investment income is 8,100. Of that 8,100, 5 months of that was incorporated in your patents. So how much was incorporated in your patents? You're going to take the 8,100 multiplied by 5/9 because we only had it for 9 months and 5 months were incorporated. So that's going to give you 4,500. Now, investment income due then, so yearly amount to receive is 8,100. We have received 4,500, which was put into your patents. So 3,600 is what's left. That goes into your balance sheet as a current assets. And then your patents then, we need to take our investment income out of our patents. So to take it out, we need to add it on. Why? Because income goes on the credit side. So there's 4,500 going on the credit side. The corresponding double entry would be the debit side of patents. So that's why patents are added. So that's why this investment income is added onto your patents. So that gives you 48,000. It's written off over a 5-year period. So 9,600 is going to be your profit and loss in administration. And the difference then between the 48 and the 9,600, the 38,400, that goes into your balance sheet as an intangible asset. So that's how you answer part 5, patents of the company account question.